Very nice. I'll be working throughout the holiday.
Yeah. Yeah, so we are just I heard just in the US many people are already out of office, right? Just now, I guess, yeah, today even. But in Europe, it's not the case. Not that people start like going on holiday for Xmas like today.
Well, Tom and Cody are still working.
Yeah, but somebody just wrote me that he's on a plane. I can check who was this. Yeah, he can't be on the call. I see it. Yeah.
Okay. So do you think we should still do the meeting for next 2 weeks?
I don't know. I would like to finish the cycle somehow, because then we can like start fresh.
Okay.
But I think people can catch up looking at it, and also it's very good that we have now Derek making reports of this. I think, yeah.
Yep. So who is Joyce?
Hi,
Joyce
everyone.
is from Grow team. Yeah.
Hi, everyone. This
Hi,
is
Joyce.
Joyce. I'm actually now just traveled from UK to US. It's interesting because I feel like the field that we are in always make it sound like no one is taking holidays yet. But then I suppose, as you guys said, in fact, many people have already started thinking about holidays, might be even out of office already too.
Yeah, it looks like, yeah, because normally we have been like more than, between 10 to 15 people. Now it's actually, now the people are joining. Yeah.
Yeah. Should we get started? Should we have Jeff to go first? Or Pam
Yes.
to go first?
Yeah, but I make a short intro. So
I
welcome.
invite the team, so maybe can I go first?
Yes, yeah, I think this makes sense. Yeah.
Yeah.
But I make a short intro about different stuff and then we go to the research part. Okay?
Yeah.
Okay. So welcome. This is the 10th Boule research call and today is the 16th December of 2021. And welcome. Today we have Jeff Tang presenting Tokemak and Peng Pan presenting Gro.XYZ. So general updates. Now we have for each meeting, Derek is making a report and we have a report for the last one. So if somebody is curious to look at this, I post the link in the chat. Just a second. So he will do this for every meeting. Sorry, yeah, I dropped a link in the chat. It's on the forum. He will publish this. So you can either look at the call or also read the report. Then we have results for Olympus. Olympus has been voted in. So Olympus is in. I also paste the link to the Snap job. Then we already did say that like 2 weeks ago. We tried to a little bit, because voting ended like 1 hour ago. And so we had the idea that we make some overlap to the call so that you can vote during the call, because I think then it's easier to vote, because otherwise you have to think to vote. And then if you anyway in the call, you can, during the call, you can vote. Then we have been working in the background about changing the Boule incentive, how it should work, and it will be work differently for the next cycle. And we are almost finishing this up, and we will send it to you like tomorrow. During the day. That's the target what we want to reach. And we like to collect feedback. So if you have any feedback, please give us feedback. Maybe it takes some, it's not complex, but it's a shift somehow. And so if you have question, just ask and then we can clarify things. And then maybe, I don't know, maybe we can have a discussion about this, we release it tomorrow. That's the plan. Then to next, we are still on collecting data for the airdrop we do currently. running on Discord, and the airdrop is coming next week. And we also will do at the same time the payout for the Boule members. I don't know if everyone did see that, but somehow we said we will distribute the Aladdin token for one epoch, so 1.35 million Aladdin token, staked Aladdin token. We distribute the next on the airdrop to the Boule members, and this is because we didn't have enough data point to calculate reward. We used a point system. We are presenting, gives you like 4 points, and every vote gives you 1 point, and then we calculate the reward or payout for this. So as we do the airdrop, we also will send this ALD token to you. And because we didn't finish the cycle, we did like a split. So we will send you part of this, and then if you have to finish the cycle, so we have 3 more votes, and then we finish it, then we can make the final calculation, then we send the ALD token to you. So it's like a Christmas. We do want to do it before Christmas. Part of this because like Christmas bonus. Yeah, so that's it from the general updates. So I think we can go into the presentation if there are no questions at the point. Okay, so Ben, you can.
Thanks, Martin. Can you give my screen sharing permission? Okay, let me try. Okay, so I invite the team member Joyce to join us, but I will give a very brief introduction to the Gro, and then I can let her have some more elaborate on some specific topics. Yeah. So
cool. Thank you.
Yeah. So
we see the screen.
Okay, can you see the screen?
Yeah.
Okay. Yeah. So Gro.XYZ is pretty easy to use product and fast evolving DeFi product. It's has two products. One is the leverage yield aggregator and the deposit protection products. The first time I saw them is they partnership with Argent, one of the best smart contract wallet in the market. So when they have some partnership, I noticed them and try to use their very early stage product. So, and I noticed them and start to know them. And their products is pretty easy. They have two kind of major products right now, but they have some new called labs. The first one is called Vault, and the next one called Power Savings, and the shorts for PWRD. Yeah, the Vault can leverage power saving accounts funds and can have much more higher APY. The power saving accounts is protected by Vault funds. So if the Vault have some attacks or exploited by the hackers or something happen, the Vault will absorb all the loss, and the power saving accounts don't have anything lost. So their major component for the between the two products is they call the risk balancer. So yeah, the risk balancer between the Vault and the power saving account is the power saving account will provide more asset like stable coins to the Vault, and the Vault account will provide protection to the power saving account. Yeah, the next account. So I think Joyce can have much more detail about their risk balancing component. But I checked with their document. They haven't much details of this part. Yeah. So later you can elaborate more. So for they have two products, how to generate yields. Right now they have 3 sources. First one is lending, like R-Wave Compound. Yeah. The next one is trading fees, like when you integrate with Uniswap or Curve, especially Curve. They have very strong APY. stable APY for trading fees. The third part is the protocol incentives. Like Curve, they will have some how to say liquidity mining. Yeah, liquidity mining. So they will also have many protocols will have protocol incentives. So they also can absorb that part of revenue. Right now, you can see their system capital allocation exposures. Most of them are from the lending protocol like Aave Compound or Convex or Curve. Yeah, these are all major tier 1 DeFi product. Yeah, DeFi protocols. And the asset they holding, most of them are DAI, USDC, or USDT. Yeah. One more thing to add, they have complete some audits like Pack Shield or Codeberry, and they also have much more to continue. If you check with their website, they have much more audits. But they have some risks from composability, as you know, like if you integrate with third-party DeFi protocols or other assets, especially when you with some new ERC20 smart contracts, they will also have some risks. So if the underlying DeFi protocols have some compromised by hackers or other kind of problems, they will have some problem to the growth. So they have one exploit before. They integrated with Cream, and Cream was hacked on October at around 130 million. And Gro has 2 of its 7 strategies allocated into Cream at the time of attack. So totally around less than 10 million and around 15% of the total TVL. But as their change product and design strategy, and so for Power Sim account, it's 0 impact. But for the Vault strategy, it's around 20% impact for the users. So I'm also the user of Vault strategy, but Cream have their plan to return to the users, but still have some impact for the Gro users. Yeah, so that's the brief things for me. If you can check with their website. Wait for one moment. Let me share the website. Sorry.
The link,
Yeah. Yeah.
The
For the team or
chat.
their back investors, I think it can check with their website, and they have more than 10 persons, and they're backed by Galaxy Framework or Robo Ventures, and they are audit and code review things. You can check with their website. Yeah. So
Okay.
Joyce, do you have something to add?
Yeah, I think I would like to take everyone onto the journey of where we have been so far. I know that, thank you so much, Pang, because I think it's a very good introduction about how the products work, especially for the core products that we have launched our protocols with back in July, where we first launched with a private beta because we believe that as all protocol, there's always risk, but then we are hoping to also get user feedback early on from the most experienced DeFi users. So that's why we have done a private beta launch with Zhijiong Score as a gatekeeper. Then eventually in August, as you mentioned, Tang, that we have announced an Argent wallet integration. And that is because we are really hoping, as I kind of try to bold in purple there, that we're hoping to empower everyone to create and share wealth easily. And one of the things that really could make it easier is that to be available on mobile. We understand that while DeFi is still very desktop focused, that mobile is still something a lot of people have got used to because of online banking and all the other services our smartphones provide. So that's why that is what started us going ahead with the integration with Argent, trying to make sure that we bring the mobile experience to our users as well. Then followed by that, we removed the Zhijiong score requirement. So that's how we have launched our public beta launch. And I would say that fast forward a few more weeks, that's when we have launched our Gro.DAO tokens. And the idea of that is to make sure that we are no longer having the core team making all the decisions, but really started decentralization as fast as we can. And the gist of that, I think, most special about that is instead of saying, let's launch a token and then have the DAO, we actually say, let's actually have the DAO first approve the token, the tokenomics, and then also the launch. So we kind of got into a chicken and egg situation. We're trying to resolve that by saying, let's not first have the DAO tokens out there without the DAO's own approval. Instead, we have launched what we call an X-Grow token. So it's a voting token for DAO members to say, are you happy with the tokenomics? Are you happy with the way we launch it? And when the votes were passed, that's when we started doing the token launch through liquidity, bootstrapping pool, and balancer. And then fast forward to October, that's how we have started. Now we have a governance token. We also did liquidity pools with liquidity rewards. And here, I think the interesting thing about our pools is that similar to other people, we worry a lot about what if we have people come in and then they would yield farm, but then at the same time just sell it out, outright. The way that we have tried to prevent that, or in a way to incentivize more people to stay, is to use a vesting mechanism. So there are 12-month vesting mechanisms where people could choose to exit early and take forfeit part of your earnings, or alternatively, you can hold. And the incentive to holding long term is also to make sure that people could claim from people who leave early. So what you forfeit if you leave early doesn't go back into the DAO treasury, but instead it's left for other people who have more conviction or more long-term holder to actually claim from that pool. So I think that's something is interesting. Anyhow, fast forward with that, decentralized marketing force is one of our first initiatives to try decentralization, not just in terms of voting power, but also on a day-to-day DAO operations as well. And here we have tried to formulate a mechanism where people who are interested in marketing, they can apply for being part of our G-Force. This is the name for our decentralized marketing force. And then after an epoch of 2 to 4 weeks, everyone can be very transparent. They will see each other's contribution on the channels that we have in Discord. And when the epoch is done, they can then vote to see who they think in the G-Force has been contributing the most. Now, obviously, they couldn't vote for themselves because we don't want everyone to just end up voting for themselves. But then currently there is a vote ongoing. So we'll see that in action by tomorrow. We'll know who are the ones who win. You can say you win this epoch and then get the highest reward that we have reserved for the MVPs. We also have announced a more liquidity partnership with, I would say, we would have loved to go to Tokemak. I know we might we'll be talking about Tokemak later on. Unfortunately, we didn't get the vote. We're also having kickstart ones with Olympus DAO, also Fei Protocol as part of their Fei Ondo liquidity as a service partnership, and also with Pfizer Finance. And as Pang also alluded to earlier, that this month we have launched Labs. The Labs part is quite interesting because it is still very much a stable coin concept where you can still just put in pure stable coins. If we can go to the Labs. So where you can do is, these are all on Avalanche. And we have done this in the spirit of many users told us it's very expensive to spend or to even use Ethereum mainnet. And because we want to bring access to more people to get into DeFi, so we have launched this product on Avalanche where you can get higher yields, higher stable coin yields, and no governance tokens involved, and purely just 28. This is already lower. When we started, it was more around closer to higher double-digit numbers. And then with that, people can just put in USDC.E, and we would be managing a leverage yield farming for them on Alpha Homora V2. The value add on this part, instead of just being, in other products, we are more of a yield aggregator with risk tranching on top. For this one, we actually have written that strategy in terms of building on top of Alpha Homora V2, we have added on automation. So for anyone who felt like leverage yield farming makes you have to sit in front of your laptop, stare at the screen, and just like keep on hands-on management, this is the solution where you can just put your money there and we will have automated opening and closing the positions depending on the market situation. So let's say when AFEX has gone up quite significantly yesterday, we would be rapidly closing positions so to make sure that there is no we limit the impermanent loss that one user would get. And in doing so, we would only have to open that positions again when there's more AFEX price goes more sideways, in which case we will earn trading fees and also rewards from Trader Joe. So yeah, those are some of these new product launches that we are doing. We have done, and upcoming we'll also have a revised tokenomics. Happy to walk through all these different things. I know that we have talked quite a bit about power and thoughts, and one interesting thing about it is I would believe that power and thoughts ultimately use risk tranching, and that is something we also see from other protocols. What differentiates us, I would say, is the risk diversification. So anyone who comes into DeFi, they don't have to learn whether they should put their money in USDC, USDT, or DAI. Instead, they put their money in, and then you will have exposure to all three of them. And right now, we also have exposure to Frax as well. So we're providing an easy way to get into stablecoin yield farming for people who are new to DeFi, or for people who are looking for a more diversified exposure rather than just putting all your money in one basket. Similarly, we provide that diversified exposure to different protocols. And that is what truly, I think, helps us to make sure that you don't need a steep learning curve to get to DeFi, because we believe it's our job to simplify that enough for everyone to use DeFi. That's why we have started with this product. I think for the second part, yeah, the labs part I've mentioned already, and the interesting part is definitely the automation. I think for both automation and risk tranching, you can see it is really bringing a lot of the concepts we have already had in traditional finance into the DeFi world, and trying to make sure that we bring marry the best of both worlds, and then so that our users can come in and find something that might be familiar concepts to them, but how they have been applied to DeFi per se. Then finally, in terms of the last one, it is our Gro DAO tokens. As mentioned, we still have liquidity rewards programs on, and once people have actually earned their yields, that is the reward center you see at the bottom right. That's how you can accrue, you can keep on vesting over 12 months. And then also once you have see other people leave, then the money goes to the amounts of Gro tokens they forfeit goes into a global vesting pool that every user who stay can claim every 4 weeks. So yeah, I know that's a lot to digest within such a short period of time, and happy to answer any questions.
Yeah, thank you very much. Yeah, are there any questions? It looks awesome. We have very nice interface. I like the style.
Yeah, I have a question, guys. Can you elaborate some details about? I check a document like risk balancer. How do they work?
Oh, of course.
Yeah.
So the risk balancer, fundamentally, it is a way to make sure that the objective of the risk balancer is doing, I would say, 2 things. Well, one is to make sure that we are not overexposed at any point of time to one particular protocol or one particular stablecoin. So the way it works is that within a defined set of risk strategies, we would, based on how much, based on any time someone puts their money in, then we rebalances our portfolio by allocating the new deposit to where we are underexposed. So for example, if we are already quite overexposed in Aave or Compound, we will say actually allocate that money to idle so that we can make sure that there is no overexposure. And what is quite interesting about risk balancer is that it's not, if that is just that simple, then that's all good, right? But if we could go back to the slide deck where there is a curve, you can see for powered and thought.
Yeah,
exactly. So we have something called a utilization ratio. what that means is amount of the TVL for powered divided by TVL of votes. And if you can see then, like what that means is then the higher the utilization ratio, the more votes users have to share in any potential loss that might be incurred by, say, an exploit of an underlying protocol. That means there's more risk involved for votes users. And the way that we are trying to manage that is also to say, when utilization goes up, we would allow heavier exposure to safer yield strategies. So then we are managing, if we have a very low utilization ratio, then the vote users don't have to share as much risk, because if there's anything that happens, there's only very few people empowered or very limited amounts of power deposit you have to protect, which means all of this, the loss, when I think Pam was showing for cream, so say 15% of protocol exposure, maybe let's say, yes, the whole protocol suffers that much, but at a very low utilization ratio, you would only have, say, vote users only take 18% instead of 22%, for example, right? In that case, we feel that we can be more bold to actually allocate to higher risk, but also higher yield strategies. And that's why we have the adjustments based on what's the optimal allocation is based on the utilization ratio, because we want to make sure vote users are also getting their returns justified for the risk that they are taking on as well.
Yeah, thanks.
No problem.
I've got a more general question. Do you have revenues right now? Do you take like performance fee, or how does your model look like?
Yeah, we do. And it was actually not implemented fully yet. Originally, we started off having 0% performance fees. That is before we had the Gro.DAO token. And we think as we have evolved a bit more, our Gro.DAO members also suggest that we look into accruing more value back to the DAO treasury. So currently, we would be charging, we have already started charging a 10% performance fees based on the yield generated, not the total deposit, on the labs products. And because we believe that it has a higher yield, relatively speaking, so then the 10% could be more justified. It's also more justified because there's more active management of the positions involved. Now for powered and votes, we have that set at 5% because there is still the risk balancer. So there's the work involved that we believe is a value add to our users. And what does all this performance fee go, right? It's now going back into the treasury, where we would be looking at buying back Gro.DAO tokens from the markets. And in return, I think we believe that it helps generate more value for Gro.DAO members if our protocol is doing well, as in it has a high TVL and high yield. But then at the same time, we are not really associating, we're not directly channeling that directly to our to the Gro.DAO token holders, because we're trying to make sure there's some separation and there's more flexibility around what we can do with the performance fees in the long run. If the DAO members decide they wanted to go for different usage, then this setup will have more flexibility than now building a contract to directly channel all performance fees to the DAO holder or the DAO tokens, so to speak. In the future, we also think about a referral scheme. So I think the second part of a revenue model is, right now, let's say Idol has a B2B referral bonus. So for the amounts that we deposit into that, there is that bonus, and it would be up to the DAO treasury, essentially up to the DAO members to decide how to distribute that. I think at the system level, it is a revenue to grow. The question now is more about like how we distribute that so that it would be the best for the Gro.DAO's future.
Okay, thanks. Yeah, I don't know any other question. I have one more, but maybe somebody else wants to ask anything.
Do you have any statistics on the total amount of rewards that has been forfeited so far by users who've decided to withdraw early?
Yes, we do. We have a Dune dashboard that is now in the making. Actually, let me double check on this one. Yeah, so we have got a Dune dashboard that we have one of our community members actually built that for us. And currently we have the bonus pool. Let me actually just like copy over to this one. I think there is one that we are trying to make to there are something that we just want to like give a refresh view of this. But in general, if you look at the Dune dashboard, you will see the total circulating amounts and how much that has been claimed. We have seen that the bonus that has been the total quote unquote penalties, right? The growth given back to bonus pool is around 226,700, and of which you have already seen like 76,000 of them, 77,000 have been claimed. So right now there's roughly say 150,000 left in the vesting pool that is waiting to be claimed by people who are still holding Grow and vesting. I think, by the way, Jeff, I really like that question. I think in general, we are really hoping to bring more transparency to our community. And at the same time, we have been involving a lot of community members to help us build up different dashboard views, as well as like marketing efforts. We also have a vote going on that is about marketing budgets, but in order to support our decentralized marketing force. But going into the future, I believe we want to also broaden that up. So we have more different community members with different strengths could contribute in their own way. So whether it is in developments, whether that is in discussing yield strategies, whether it's in helping to do more community support, there are ways that we want to formulate the program so then everyone can just put in, what they believe they are the best at. So far we have those, the G-Force as well as OGs. The OGs are people who have been around in community for a long time and happy to help onboard new members and just chatting to them, answering questions whenever they can. And so those are the two roles we have right now. Going forward, we are also hoping to open up more new ones as we have put together a process for getting budgets and also getting the DAO approval for having these different working force or DAO working force, so to speak. We'd love to get anyone involved, by the way. If you're interested, please let me know.
Yeah, everyone is looking for contributors somehow, but for sure. Yeah. I have one question. So is it the all the products you showed us now, are they like human managed or are they algorithmically managed? The thing on Avalanche, is it an algorithm who then leaves the pool if there's impermanent loss at certain level, or?
Yeah, so that is, I think that
is it somebody, is it how is this decision made?
Got it. So these have been parameterized so that it is managed by an algorithm. And the way that I would say it's more like they are models that we have done, and then we set up the parameters of when we should open the position, when we should close a position. But the execution of it are based on an algorithm. So then there is no one in the team who has to sit in front of the laptop just to keep on managing them. But we do from time to time evaluate if those parameters are correctly set. So for example, when we are seeing that one of the times when we would set we should close a position is when AVAX goes into a one-directional price movement, either a pump or a dump. And in that case, we have established a boundary or a price band, let's say, if it exceeds X% of the price of AVAX when we first put the money in, then we would close that position. Now, whether that X% should be 3%, 5%, 7%, really depend. It is more of a thing that we are still figuring out on understanding what's the risk and reward. The risk of having a wider band will be higher impermanent loss, but then that also might give us a higher, longer periods of time where we can do yield farming and earning trading fees and rewards. So those decisions are still currently manually decided, but then we are hoping to that once we have got it up and running, we will no longer really need those decisions to be made frequently, because ultimately we are hoping to make this as automated as possible. And also then with that, we can provide those transparency to our users on exactly what parameters are being used as well. But for adding new strategy, one more thing, adding new strategy is still something we are doing manually. So we do evaluate the yield strategies that you have seen in the dashboard about the allocation. Whether we add a new strategy or not is still manual, and we have established a yield strategy selection framework to do that. but I would say it is a combined effort of core team or whether it is community members proposing new use strategies, and then we will discuss that with the framework to see whether or not we should add that in. So strategy selection in general is still manual, but then the rebalancing part for the risk balancer or the automated, position management for labs, those are both done by algorithm.
Okay, I think, yeah, because we have 1 hour for 2 projects, we should come to an end, and maybe there are some last questions, then we can have them, and anyone has further questions. I have a last one maybe. So you're targeting, now you're on mainnet and Avalanche right now.
That's right, yeah.
So your core product is on mainnet and the labs is on Avalanche, basically.
Exactly. I think going forward, we do believe that there will be a multi-chain future. And so we are also scoping out what is the best way to have those different chains being integrated with each other. I wish I can tell you more about another place we are going, but we are under a comms embargo until hopefully later this week or next week. But we're also hoping to launch more on layer 2 and in general, any places that could really be having a lower gas cost for people who are new to DeFi to join. Or I think because the hurdle for them probably is the highest. So that's why we want to make it easy for them and not feel like they have to put in hundreds of dollars before they see any returns.
Yes. Yeah, I think that's important because you rather start small and get used to it, and then you go big to mainnet maybe. Nobody knows. Yeah, thank you very much for joining us. And
hey, Joyce or Martin, sorry, I had just one more question. First, thank you for presenting. This was really interesting to get to review. And I was looking at the labs tab there, and I was wondering for those experimental yield strategies that look like they're powered by Alpha Homora V2, is Gro doing anything else here other than providing like a dashboard that connects to these strategies through Alpha Homora? Like, is there anything being done to, increase the yield or to offer these projected APYs? Or is it more just about like, hey, like we're a dashboard, check this out. You can use Alpha Homora V2.
So it would be more of, by the way, thank you for that question. I think a lot of people have raised that in our community as well. And in general, we have that actually for the value add part from Gro, or the Gro twist is the automated position management. Because right now on Alpha Homora, you can do leverage yield farming, but you'll still have to manually monitor them and also decide how much leverage, is that leverage too much? Am I overexposed? And then consequently, should I close positions myself? So we have automated all of that management process for the users, in which case they could put the money in and then essentially let the algorithm does the job. And which means that you don't have to stay in front of the laptop. We have just looked into more of a case study and saw that even right before we launched in the first weekend of December, AVAX has dropped by like 20% in price. But then if you have held throughout that period in the yield farming, you probably lost like half of it, so around like 10% for your value. But for this particular, we have actually made a modest gains of around 0.5% because we have been very actively managing the positions to limit the loss that incurs because of the one directional price movement, as in this case is the AVAX price dump. So that's why I think we have been really trying to make sure that everyone that comes in using labs, you can be yield farming or doing leverage yield farming as well as a professional full-time dedicated yield farmer would. And that is something we're offering, I would say, on top of what you could already get in other platforms. So we're very excited about this. We're really hoping to bring this automated management to more different strategies as well.
Awesome. Thanks so much.
Not at all. Happy to chat any more anytime. I know there's a time constraint. So for more questions, can happily chat around in our Discord, or as well as just DM me. I will put the Discord link and my Telegram handle in the chat. So then feel free to reach out.
Yeah, thank you very much. I will check it out for sure. Just connected to Avalanche stuff. So
Awesome.
yeah, we have next. We switch over to the other presentation. This is Tokemak from Penn. No, sorry, Tokemak from Jeff. Sorry, Jeff, are you ready to take over the screen? Yes,
So let
please.
me share my screen. Cool. Can everybody see this?
Yes.
Awesome. So thanks everybody. Today I'm going to be reviewing Tokemak, and unfortunately it sounds like we're prioritizing EVM projects at the moment, and so personally I've been mostly doing my DeFi on Luna Terra, and so it's a little bit unfortunate. I was very excited to see that Orion Money was one of the first projects that was presented by one of the members here on this chat, but happy to kind of talk about Tokemak. And so what is a Tokemak? It's a play on the word tokamak with an A instead of an E, and it's a machine that confines plasma using magnetic fields, and it's a donut shape, generates potentially fusion power. So just gonna go through what the project's goal is. So Tokemak views itself as a liquidity service, so liquidity as a service, and as a DAO, they view themselves as the next step in this general progression, and these next few slides will kind of generalize that. So if you compare the internet to the blockchain, right now, there's currently DeFi, where most of the liquidity is inflation-based. That's akin to dial-up during the internet days, and so Tokemak views itself as the next layer, which would be broadband, which is distinctively aggregating internet together in the internet analogy. Similarly, they view themselves as the AWS of DeFi, and so for Web 2.0, AWS provides kind of like the plumbing for some really cool apps that have developed on top of that, and Tokemak views itself as a liquidity platform to kind of aggregate and provide stable liquidity sources within DeFi, so that other DeFi apps can really excel on top and not have to worry about inflation. You can see some of the inflation numbers for the on the bottom left. So this is just a summary of kind of like the vision and the purpose of the Tokemak team. Comes from a DeFi trading firm called Fractal, based in San Francisco. So they've been around, I think, since 2017. And this, I really like the project for one reason, because it's a group of traders who kind of have been doing DeFi trading for a while, and they view this as one of the core bottlenecks and issues that are present within DeFi, especially after kind of Compound did its thing in June 2020, which really launched this this wave of DeFi 1.0 and 2.0. And so Tokemak, their kind of main goal, once again, is to deal with this inflationary mechanism of yield farming through kind of providing a two-sided reactor where both the project tokens and the local token, which is the TOKE token, can kind of coexist to provide enhanced yield and sustainable long-term yield. So this is kind of the general idea. So the token is used to vote on what projects will generate these reactors, and it's 5 per core voting cycle, and there have been 2 so far. This is just an example. If you own a certain number of tokens, you can then reallocate it. So in this example, they've allocated their voting tokens 40%, Uniswap 32%, Balancer, etc. You can put them all in one basket, or you can spread them around based on your preference. And so, and then what you have to stick your tokens to vote, and then once you do that, then you can vote on which liquidity or which DeFi protocols you wish to support, and then there is a voting period, and then they tally the results from that. And then once it goes live, at the moment, the rates are updated rebalanced every day. There is a plan to move that to every week, but if there are unbalanced reactors, such as in the top left scenario, there's too many tokens and not enough Aave, then there will be a rebalancing where the APY you see in this example is only 15% for the tokens and 65% for the Aave. And if the other way, and this will incentivize, because of the higher APY, more Aave tokens to come in and more tokens to come out. Similarly, in the other scenario in the top right, there's too few tokens within the Aave, within the Toki group, then the APY will be significantly higher, both relative to the project and also relative to the other Tokemak reactors, and that will incentivize for Toki stakers to basically unstake from into this one. And the net result is to have relatively balanced reactors, which we'll see in the website later on. And in terms of one of the benefits from there are other, going back to the previous slide, you'll see that these are two single staked pools that combine to form kind of like a reactor. And so this is to minimize impermanent loss. And there are other protocols out there like Bancor v3 that do that as well. One of the reasons why they want to do this is if you have, in this example, 6 single pools, and then you have tokens on the other side, then technically you can create 6 choose 2, which is 15 markets, which is described in the right. And so this enhances the liquidity options. This is technically kind of trivial relative to Uniswap, for example, because to get between any particular pair, you could form a daisy chain. And so it's not completely groundbreaking. However, the fact that there's high liquidity in each of these 6 will minimize scenarios where you have some very small pairs on Uniswap. And then finally, one of the things, so this is related to impermanent loss. I don't think it's live at the moment, but in any case, when there are withdrawals within the ecosystem, and in this particular example, you'll see that there's 100, the TSNX, which are the Toki version of the synthetics tokens. There's 100 TSNX, but only 90 SNX in the reactor, whereas on the right side, it's the opposite. There's 200 TAVE, but 210 AVE in the system. The reactors will have a rebalancing mechanism, which will reweight the reactors, and this is another mechanism for minimizing permanent loss. And this is just a graphic saying that because Tokemak exists and has relatively, so this is a good example to think about when you're thinking about some of the DeFi pools that are out there, such as, for example, there's always a risk that a very large whale will withdraw and create an avalanche of trading scenarios. And so, large players definitely have larger effect on the pricing and the mechanism of DeFi. Tokemak here is saying that they are, their goal is to be a large liquidity provider for tier 1 DeFi projects. And with them in the ecosystem, they don't have a plan to unstake and sell. And as a result, if you compare the right with the left, the effect of whales gets minimized. And so that's the general overview of Tokemak. And then now it'll be good to look at what has actually happened since their launch. Their long-term vision is they want to replace the reactors with just protocol controlled assets. And then, this is one of the biggest concerns of DeFi is the highly inflationary nature of both the yield on the numerator side and also the TVL on the denominator side. There are at least 3 factors when calculating the efficacy of a DeFi protocol. And their goal is to kind of, move from the current stage, which is on the left, into the middle stage where the projects themselves do the token swap, which has already happened. And finally, the protocol controlled assets themselves will be part of the Tokemak. So here are the results from the first vote. And I thought it was pretty interesting. And so I did some pretty simple math to kind of see what exactly happened. They had a degenesis initially. So it's kind of like an LBP where people put in tokens. It was USDC and Ethereum, and received Tokemak tokens at a particular price based on the amount that was raised. And if it was greater than a particular hurdle, which is 24 million, then in addition to Toki tokens, a portion of the subscribed amount is also deposited into their Genesis pools, which are USDC and ETH. So this was the first initial batch of Toki tokens that went into public. There are also private tokens that were sold. They raised $4 million in Q2 of this year. And so for those venture capital related tokens, they were given 1 vote for staked liquid token. This is after degenesis, but during the first round of voting, if you staked within the single stake pool, you receive 4 votes. And then if you staked in the pool 2s, where there's both Sushi and Uniswap, you received 8 votes to kind of reflect that your Toki has $2 worth of exposure for every $1 worth of Toki that you have within the pool. And so there were 35 million votes that occurred during the first batch of voting. The top 5 went in, and of that 35 million, 15 million votes were based off of escrowed, and remember that's 1-to-1, and then about 5.7, 5.4 from Union Sushi, and then 9 million from single stake Toke. And then I just undid it and divided by the number of votes per Toke, and you'll see that actually 15 million tokens that were escrowed voted, 0.7 million that were in the Uniswap, 0.7 million that was in Sushi, and 2.3 million from the Toki single pool. So there's actually quite a few number of tokens that are escrowed, but rightly so, they decided to weight them very low. And so it ended up being a pretty balanced vote. And then these are the results from the first vote. And so you'll see that Frax, Alchemix, Tracer DAO, Olympus DAO, and SushiSwap were the winners. And the lowest winner received 3.5 million votes. And then if you use kind of like the 4 votes to 1 Toki token as a baseline, there were approximately 1 million Toki tokens that were kind of utilized for that, which at the price at the time of the vote of $50 is about $50 million. And so that's kind of like the threshold. So it took about $50 million of Toki tokens, approximately, depending on how the vote ratio worked, to get through the door. And these were the 5 projects. And these are, you know, tier 1 projects. And then these are the results from the tier 2, from the second round of voting, core 2. And they did this thing where if you were staking in the pool 2s, you were able to get essentially, and didn't unstake, you were essentially able to have an additional vote. And this is to incentivize staking, and also to incentivize projects that barely didn't make it from the previous round. And so, you know, in round 2, you'll see that Fox, Pfizer, Synthetics, Illuvium, and APW made it through core 2. And you'll see that this really affected Synthetics, which had 3.5 million votes from core 2 and 3.1 that kind of piggybacked over. It was drawn over from core 1. And one of the things that happens after they get voted in is the projects themselves will initiate a DAO vote to do this token swap, and it's very useful because then the Toki team has the project tokens, which will be available in Treasury to fight IL, and then the Toki team will have the project tokens, and the project team will have the Toki tokens, which they can use to place into the reactors and accumulate yield, and also to kind of provide an anchor liquidity for the reactors. And so I just went through the projects that made vote 1. So you have Frax, you know, 100% voted yes. Then you go to Alchemix, 99.9% voted yes. Sushi, 99%. Not very high participation, 6.7 million out of 192 million tokens outstanding, but the rest had pretty high participation. And this one is you'll see that it's 99.9% voted yes as well, 63,000 out of 6 million tokens outstanding. And so then, you know, we'll go to the page itself, and you'll see on their dashboard, there's most of the liquidity is within the Genesis pools. There's 1.2 billion TVL, ETH and USDC are in the Genesis pools. There's 2 pool 2s. The Toki pool is 140 million, and you have to vote in your stake in order to generate rewards. So we go through, this is the front, this is also part of the dashboard. And so you'll see there's 85 million in Frex, earning 40%, and on the other side, there's 52 million in Toki, earning 57%. So these are staked Toki that are voted on the Frex protocol, and similarly for Alchemix, Sushi, and it's approximately 40% on the project side and approximately 60% on the Toki side. And these are the other ones. So Tracer is from the Core 1, but the Visor, APW, and Fox are from Core 2. And you'll see, there's significantly less TVL at the moment, probably because, these were voted in relatively recently, but pretty healthy APY on both sides. And just some general stats, the TVL has been generally growing over time. And then if you look at some of the Dune analytics, you'll see, on the top left, these are all of the pools that are within Tokemak. And then you'll see in the bottom right, their treasury has pretty healthy, and they've done the swap. And so they have the tokens from the projects that are participating.
Yeah, very nice. I don't know. Yeah, it's an awesome presentation. Thank you.
Yeah, thanks, Jeff. I was curious if you had a point of view on, you had mentioned in the deck that the goal is kind of to reduce the ecosystem's overall reliance on, inflation-based yields. But at the same time, it seems like the mechanic that's being used is to obviously direct liquidity to projects and then effectively receive those projects' native token in return, which feels very similar. I guess could you pull on that thread more for me and kind of draw the distinction between the two models, between the rewards and the token swaps or whatever that second mechanic is?
Yeah, great question. So as I understand it, for the token swap, the project treasuries tokens swapped over to Tokemak primarily exist to fight IL, and so it's not necessarily part of this black hole dream that they have for the projects. I think that the reactor is the main mechanism for fighting kind of inflation, and there's a few parts. So at the moment, the project side of the reactors do not generate yield, and so they're just sitting there. And so obviously that is anti-inflationary, right? They're not, if you put in a sushi, to my best knowledge, so if you put in a sushi, you're not staking for X sushi, and so therefore that does reduce the numerator on the inflationary component. So I think that is relatively useful. Similarly, in order for this to work as a participant in DeFi, the yield on Tokemak must be higher than the yield in the native project. Otherwise, by no arbitrage, you'd be better incentivized to go on the other side. That's one part. And the second part is obviously you're also making a play on the interest component. And so if I'm staking, sushi and receiving Toki tokens, I'm generally bullish on Toki, and I better be, bullish on sushi as well. And so, that is another component. It's kind of like swapping the kind of like the interest component from one piece to another. And obviously that generates inflationary pressure on Tokemak itself. And so they've kind of bootstrapped this idea and as the liquidity provider, as the market maker for this general DeFi kind of platform, they want to kind of offload some of that pressure with these large, hopefully large Tokemak reactors.
Yeah, awesome explanation. Thank you for that.
Are there other questions about Tokemak?
So I have a question. So Jeff, so how much of this has been executed in terms of providing liquidity? So has Tokemak provided liquidity for any of the projects listed?
Yeah, so that I'm not aware of. I'm unfortunately not like a power user of Tokemak. So let me write that down, and then I can get back to the chat. So it's a great question. By providing liquidity, do you mean like facilitating swaps of tokens within all of the reactors? Is that correct?
Yeah. So has those liquidity, actually, been implemented, right? Or is just sitting in the reactor for now? Or is that,
Yeah.
going to Uniswap and Sushi swap?
My understanding, and I may be wrong, they are not active at the moment. Okay. So it is conceivable. For example, I'm just like speculating that the Fractal team could be able to, use the funds to facilitate. Like in the deck, they mentioned that they can provide, requests for quotations, which is like an OTC mechanism for facilitating trading. But to my knowledge, I'm not aware that they're using the funds that are within the reactors.
Right. So the projects are actually bidding to be in the reactors because they think, there will be liquidity support when, this is launched officially.
Yes, in their literature, they do say that the goal is to actively provide liquidity. And in the post that I've read so far, every time it mentioned that this has not gone live yet, but it is a goal of the project.
Okay.
Yeah, we already hit the hour. So the last question. I think Tokemak is awesome, but somehow, I don't get it completely what they are doing basically normally. But it's just a mainnet, I guess, right now.
Hey Martin, the way I'm thinking about it is because so my team at Fourth Revolution Capital invested in Tokemak, but this was before I joined the team, so I don't want to take credit for whatever investment thesis we had there at the time. But the way that I've thought about it is, so I love Bancor single-sided LPs because I can just deposit a single token and then I earn rewards denominated in whatever token I deposit. So like if I deposit ETH or wrapped Bitcoin or stable coins, I'm still earning rewards denominated in that token. And I don't have to worry about impermanent loss. The step further here, if everything here executes as planned, is you can kind of think of that model that Bancor pioneered with single-sided LPs, but creating a like larger liquidity layer where Tokemak is directing that liquidity. Like basically this becomes an aggregation layer and we no longer see, we no longer see, it would be like an old story to tell, like how we used to put, money into specific LPs where we were like, well, should I put in Sushi Swap or should I put it in, Uniswap, and trying to like discern where I'm going to earn the most yield. This is meant to be that sort of aggregation layer. The one drawback, and Jeff, correct me if I hope I have this right. I'll be embarrassed if I don't have this right. When you earn the rewards with Tokemak, you are earning them in Toke, the token. So you aren't earning. Yeah. Okay, good. Okay. I was like, I always get like, I'm like, if I'm not getting that right, how poor of a representation am I of Tokemak? But that's the drawback. But that's also too the upside. If obviously if you think that Tokemak is undervalued and if you want to like hold Toke long-term, I think one concern is if someone was looking to put their money to work, not worry about impermanent loss, but have to dump that token continually because they want to accrue, let's say, more Ether, wrapped Bitcoin. Tokemak might not be as good of a solution for them, But anyways, that's how I've been thinking about it, and it's
yeah, that's what I'm feeling that, somehow I feel that it's about this, but I don't understand it completely. I think it's maybe just another bet against socialized impermanent loss. If the impermanent loss in the sum is higher or lower than, if you can break even, if you dispute all impermanent loss over different project or not, that's maybe one of the core questions.
Yeah. And one of the reasons I thought Tokemak, has a really good shot of this all like working as planned is Bancor's single-sided LPs have been very successful. There was concern that BNT holders would feel such a huge loss from subsidizing impermanent loss, but they've accrued so much more liquidity and then so much more trade volume. And so, and also too, Tokemak here should be complementary to Bancor V3. Like, I don't see them as being in competition. If Tokemak is successful, then the person who just wants to deposit their sushi or their ALCX and not have to think about where to put it to work, then Tokemak could be the best solution. However, I do think there's going to be tokens or pools that are isolated to, like, let's say Bancor V3. Like, I put WNXM in there because I want to earn more WNXM. Like, I want my rewards denominated in WNXM. And so that's where Bancor V3 makes more sense to me. So anyways, Jeff, great presentation. And it's you did a great job of explaining, I think, some of the complexities that definitely fly over our heads.
Thanks.
Yeah, we have like maybe time for a final question if there is one, or otherwise we close this call. Okay, so this is just the outlook. I myself, I won't host the next two calls. We just have two other calls, and then the cycle is finished. And the cycle means that every Boule member has presented one project, and then we will start a new cycle who also have different Boule incentivization. That's the thing we share. And the next week, I don't know, Sharlyn, do you make it live now? The next one.
So next week will be a meeting held in Chinese.
Yes.
So we're going to post it on YouTube, and we're also going to launch snapshot proposal after that, and we'll have a forgivener to host the meeting for us.
But is it live, not pre-recorded? We once discussed the pre-record.
Correct.
It's live.
It's live.
Okay.
Yes.
So this is the Christmas edition in Chinese. So if you want to learn, join it. It's interesting, even if you just see the slides or there's information to collect. And then the last one, it's on 30th December, and it will be hosted by DeFi Dad, who is also in the call. He agreed to take it over for this one, and this is like the final one for the cycle, and then we will start fresh next year. Also, maybe that I forgot that. So we had we discussed if we can. We are now on the product side. We are waiting for the audit coming back, and maybe it's even ready to launch. But somehow we discussed if you can launch just part of the project, just to show the public that we have worked in the background. But somehow everything has to be together, and so we decided to postpone it to the next year, basically, and mostly because a lot of people are not ready during the holidays to play, and are not present in front of the computer. So we decided to make a fresh start in next year, but the airdrop will happening next week. So that's from my side. Thank you for joining, and there will also be Derek will also write a short version or report of this call, so check it out on the forum. Thank you very much. See you.
Thank you so
Bye,
much.
everyone. Thank
Thanks,
you.
guys.
Bye.
Great presentations.
Thank you, guys.
Cool.
Thank you.
Have a nice holiday and Christmas if you do it.
You
and New
too.
Year.
You too, likewise.
You too.